All right, so the yesterday was the November 12th. It's big down, is big up, confusion sideways, and we closed around the moving average. Today continues the same way, but at the open, I see a really nice bar one, good buy signal bar, but only 20% of its body, or the 1/3, is actually above, or 30%, I should say, above the moving average. So I'm not so interested in buying this, but I did have a target, so I expected on the Globex session is this area to be tested. I was really going for, I did trade the after hours is on the Globex session, which was these news. I went one time and two time. The is Asia session projected up because is the London trapped. So we are now going up. We're going to test the London high. And then you can also project the London session. You don't have to use the Asia, but I like the Asia session. So we are up in 2R. So I took profit there. It ended up going up to 3R. So 3 times the risk. And bears done fantastic. So this is your risk right here. Goes up and you get 3 times. So this was a good deal for bulls. I only captured 2R from that because it's news bars. I don't want to linger too much. You never know what will happen. And anyway, so here we go. Bar 1 was great at the open, but we are testing Globex high. And although where were we? Oh yeah, we're around here. We had a huge drop right there, so I'm looking for not the Globex high. We already tested. We came down, so we do have a double top right there and 3 bars up. It's not the official inside bars, but that's it. So let me show you guys a tip here. When you have a bare body like this, right, or whether you're doing this on a higher time frame or a smaller time frame, I tend to look for wicks. Okay, so I'm seeing a wick here, but it's not good enough to say this is going to trap, okay, trap anyone right there. So I'm thinking this is going to go sideways and form some kind of a bear flag. And there it is. It started forming the bear flag. I'm always looking for some kind of a pattern at the open. Okay, this is in one of L's How to Trade the Open webinars. He's got a free one. You can go to the YouTube channel, L Brooks Trading Course, or Price Action YouTube channel, and look for the webinar that is free, and that's How to Trade the Open. He talks about these patterns, right? And so I'm thinking is I don't want to buy this because most likely this is going to get the bear, okay, bear side. So I'm thinking, how can I sell this? I'm looking for okay, so it's wicking to the downside. I'm counting several legs down, and I'm seeing here kind of a spike, okay, pullback channel. So you see that pullback right there? The top of the pullback is where we're going to test, and then we can come back down from it. So I'm looking for some kind of a double top. So here's the first wick, comes back down, and then goes right back up. I don't have any wicking to say that, okay, this is a good sell signal bar. So, but in the meantime, I'm counting 3 legs up on this, down on this, up on this, down on this, up on this. So it's a bit difficult to count, but it's there, okay? 78 is up and down. And then the second leg goes up and down, and then the third leg. So I don't want to buy anymore. Even if you put a buy order above bar 3, you're probably not going to get filled. So you see right there, I had a buy order. I never got filled above bar 3. So I'm thinking, you know what? I can actually exploit this double top and instead sell. So I put a sell order. I canceled it as this bar started to come down. And I'm thinking there's a double top here, and if the bears actually close a bear bar, I can sell. Okay, so I had a sell order right there, stop micro double top right there, and then immediately bears entered me into the trades. I'm selling, and then it goes against me with bar. I got the 1R, and I actually was trading with a bunch of people on my Discord. While L was reading in the trade room, and we all scalped here. But I said, I think we're going to go down to 2R. But then I start the measure from here because it's double top is neckline, right? And then it's probably going to come down more. So that was the actual official 1 hour and 2 hour. It came down to 2.5. So it really extended the profit taking, but couldn't close a bear bar, and then closed the bear bar above the 2 hour. This trade is done. Get out. If you haven't taken any profits, they're going to chew you alive, because this right here is trapping. These bears are smart. They already know that there's several legs down here. You can even count maybe a leg 1 here, pull back leg 2 here, pull back, and this is the third leg, third official leg. So they're taking profit already with bar 8 while you're still selling. You're going to be trapped, right? And where's it going to go? It's probably going to go right back up to the starting point of the third official leg, and that is either the 7 high, or it can actually test the 6 high. All right, so we went up there, and that's your high one. That is not a good entry long. But then it comes down and takes out the 10 low with 11, and it closes a bull bar. I dropped another bull. I dropped the buy order right there. So I was out right there. I started the buy. I wasn't very happy. I bought again right here. This is what I should have waited to buy, but this was perfect for me. It was good enough, and we never came down to the midpoint of bar 8. Obviously, bulls are in a hurry. They're trying to reverse. And if market is going one way at the open, it's probably 50% of the time it is the wrong way. Okay, so it's probably going to reverse. So I'm looking for ways to determine that this is indeed reversing. If you get a pin bar like this, whether it's bullish or bearish, if we're not coming down to the 50% of its wick, and if we're not testing and suddenly you're getting minimum 3 bull bars back to back, that's momentum right there. Is bulls are in a rush to buy. So don't linger. Look for good second entry bull bars, such as bar 11. Buy above it, and you're going to go long. Bears try to sell again because they are trapped here. Best place to sell is the starting point of this strong leg down. If they sold there before, chances are there are residual institutional orders stacked there, so you can sell with them and make money. Your goal is not to break even. Your goal is to scalp and exit if the bears are not closing bear bars below strong bull bars like bar 13. Because not able to take out a bar like 13, meaning that they're going to actually trap more bears. But really, in essence, no one's getting trapped there. That's just these bears are selling here, right? So if you are a bear, maybe you're stuck here, you sold again somewhere up there, your break even is, your break even is right here. Did you break even? No. Look what happened there. That is a problem. That is the 50% is average, okay? Break even. It's to, lower your losses, minimize them, and you couldn't even tag it. This right here tells me there are no bears, and these guys were so desperate. They only got a 1 bar. Very difficult to sell against this micro channel. Chances are they're going to fade this, and they're fading, so they're not even allowing you. So that means these bulls are even in a more rush, and they want to keep going higher. So the next stop is right here. This is where I want to see market going there, and we did. So I kept buying. So I'm looking for good buy signal bars. I want to buy high 1, high 2, high 3, high 4, high 5. Okay, so this keep going, but really you should be counting. As soon as the bar goes below the prior bar's low, that's when you should count that as a high 1, high 2, high 3. Like this would be high 1. This would be high 2. This would be high 3. Yep. So this 23 went 1 tick below 22 is high 5, I guess. High 4, high 5, so and so, right? But there's no. Or you can look for how many times these bears try to pull back, then count those, right? So here we're going up, right? So this is the first time you're seeing a decent bar. That's a high 1. You can even take that. But here we went below, so to me that's a high 1. Second time, that's high 2. Bears try to sell again, failed, that's high 2. Third time, bears tried, and we went above it. That's high 3. Goes, it goes, goes, goes. Was that second or third? I lost count. I think this is the high 4. So this is very strong and just went back up. So that's your high 4, high 3, whatever. I lost count there. But another time they tried, so we went above it. That's it. You can buy above that doji, right? And it's not a good close anyway. So it's going, keeps going. And here is, look, we made a new high. That's two-legged move. This is a good buy. So I did actually buy above 40. So I'm buying, I'm buying, I'm buying. And but finally is we're getting really good sideways. So this channel started to go sideways. Plus, when you have so many highs, like high 4, high 5, high 6, whatever, it could be actually a bear flag. Okay, so it could be a channel forming for bears. And if you actually look back, right, look at this. It could be a double top neckline, bear flag, and this would be the neckline, and the bears want to sell and test that neckline. So this ended up is basically a leg in some trading range also. So it's going to go sideways. Then we got this mess. So I was really looking for market to go to the high of yesterday. But then we got this. I said, don't exit, keep buying, because there is no gap here between the bear bars, right? There are no bear gaps with the bear bars. There are no gaps between the bear bars. There is no third bear bar. So we're not always in short. This is still always in long. So second time the bears try to sell, failed, and the gap to the moving average is open. So I said look for bears taking out that open and taking out the high of this bar. If we get a bull bar, we're probably going to go higher. We got a bull close, but no follow through. We come down. Now I'm seeing some gaps, and I'm not very happy. But I kept my long position, and the market came down here. I'm still buying. Is a good bar, okay bar 46. Chances are bears will try to sell one more time. But one thing that the bulls are failing to do here, they're not closing the gap. They have tried here. Some will say, oh yeah, that gap is closed. Not necessarily. And I have to actually zoom in to look at it. You see that bar 53, the way that it closed is, look at the open of this bar. Is open of bar 44 to the close of bar 53. That is not closing above. There's still a slight gap there. Okay, so to me that gap is not closed. This is plus, this wick doesn't count. So there's a gap right there, and it's a itty bitty gap open, and the bulls could not go and close above these highs. This is pretty much a trading range. Now, granted, I kept holding my long because another way I look at it, this was a head and shoulders, is try to break the neckline, right? So the neckline failed here. Okay, really good buy signal, but I'm buying. I bought again. So now I'm looking at this. This is not good. It's not doing what it's supposed to do. It's not keep going higher. And I was still holding with 54 and 55. Once it closed the third bear bar and broke this, I was like, I'm out of this, because this is now failure of failure. It is a swing. What do I need to swing this? I already put a free YouTube video out there. You can actually watch the whole thing. I'm looking for 2 consecutive bear bars. I also, before that, I'm looking for consecutive tops and bottoms, so double tops and double bottoms. And then my trigger is 2 consecutive bear bars from the highs, not in the middle of the trading range, from the highs. 54 and 55 is just the ticket. So I am going to measure that. I'm not putting my stop here. I'm only measuring consecutive 2R swing targets. You can put the stop above the higher high, or higher high in this case. So here's my 1R, and I started to sell. Right around here, I told everybody 3 bear bars. What will the market do? It's going to go sideways and get another leg or 2 down. That's your sideways. Immediately, this bar actually jumped up. And I told everybody the reason why this bar is jumping up, it's not telling you that you should buy this bar 57 unless you are stuck still waiting there and you didn't exit out of your long. this bar is a basically, if you are long, maybe you bought the close, maybe you bought that close and you were still long, right? And then you buy again, right? The close of 56, that right there is your average break even. This is it. Um, the bulls are breaking even and they're exiting out. Okay, Brad Wolf just posted, and I think his session is, what is it? Okay, 4:20. So I'm going to be quick with this in 5 minutes, everybody. All right, rush, rush, rush. All right, so where was I? So that is basically a break even with 57, and the bulls are exiting out. And I explained to you what to look for to determine whether this is going to keep going up for a full break even or it's giving up and the bears are coming in. You already know how to determine that. But now let's get back to selling this, because we ended up selling this. So I'm selling this. I took profit there. You can sell more. If you have if you have 3 bars here, that's the first break of the channel line. What do? You're going to sell right here. You're going to sell the close of that bull bar, or you're going to sell one tick underneath that bar, but you're going to sell it, right? Or at least sell market, but just sell. Take profit right there. That's 2R. We came to 3R. It kept selling, and here that is a implied flag. You can also sell that, right? You have trading range here. I'm going to take that trading range and I'm going to put it down. It's a 3-bar trading range. I showed you guys how to hunt those and trade them. That's a 1R right there. We got a 1.5. So it's either or, whatever the stop you're going with. I'm sorry, setup you're going with. I know I can delete that. Okay, here. You're just going to keep selling, okay? So here's the 2R and here's the 3R. Market did phenomenal. We got a leg 1 here, pull back, leg 2 here, pull back, leg 3. I said to everyone, if you're going to sell this, look left. We have a trend line here for bulls, okay? That means this is liquidity. Bulls, look, this trend line, we actually moved underneath this trend line, right? Here we go. Let me do this a little bit better. All right, so that means any bull who's buying, they're using the trend line to trail their stop. Market makers know that. They're not stupid. They know exactly where the liquidity is. Trend lines are liquidity. That's why L says the first break of the trend line is a false break, right? It's probably going to go back the other way. So you don't expect a breakout, expect a fade. That's because market makers are running stops there early on. So I said, look left. We're going to take out these stops. My stop was here. I exited with 3 bear bars from my long trade, and I was done with that, and then I turned bearish. I kept selling, so I'm targeting 27. I'm targeting 20. There's an equal low there, the 17 and a 20 double bottom. Most likely we're going to go there, and then we went there, and then we reversed right back up. This is also bears who sold. Remember, I was exploiting bar 3. I kept telling everybody we're going to go and test the bar 3 low. This is where these bears were selling. But I also kept saying that early on when we were up here, if we're not going to go up anymore and not going to get a breakout, that this can turn into a trading range. It's because of this opening price action that it was so strong. Look how many points the market sold. That is 28 points, almost 30 points. That's a lot of points. When market, that's half a trend. So that kind of dominates the markets, is the price action. That if we're going to go up, most likely there's trap traders here, that we're going to sell higher and we're going to get back. The early on, those bears started to sell underneath 3. So the first stop, we're going to end up testing the 3 low. We test the 3 low and then possibly 4 close. Look at that. Bar 67 actually tested right there. The 4 close went 1 tick below. So everybody else is exiting right there. They've gotten their money back. So now we're in a trading range. Okay, so what is the behavior for trading range? Well, we're going to reverse. So I'm counting 1 leg, 2 leg, and a 3rd leg. So if I'm buying, we're going to go and test the 65 high. And then we're probably going to go and test the breakout point 59 low. And the most importantly, I had a sell zone is after 1, 2, 3, 4 consecutive bear bars. This is a very strong sell zone. I expected First test, and I said I'm not going to sell this because buyers are at the 50% of this leg. They will come in, and we're going to have to go back in, and we're going to have to get the second sell signal. Maybe we can have a weak signal and go back up. We didn't get that. So sell zone is a sell zone, especially if it's a supply zone. It is going to sell. What do you need? You're looking for, here's a tip for you. When you find these levels, okay, you need minimum 3 bear bars to call a place a supply zone. Minimum 3 bear bars. More is better. The last bull bar range is your supply zone. This is a secondary supply zone. It's in between strong legs. 3 bear bars. Tomorrow we're going to test the bar 53 probably. That's the supply zone that I want to actually try selling again. So, but this is still strong because it's fresh. So expect 2 sell signals. First time selling will be a weak sell. So the buyers will come in. And it's also a strong rally. First sell, buyers are waiting underneath 72. That's your second leg up. Here's your second sell. They generally come in the form of pin bars. That's tip number 2. Pin bar number 1, 71. You can sell under and look for 5 to 10 points. You don't always get 10 points. If you got a 5 point, that's a great deal. Yep, you got just about 5 points right there. See, that's a 5-pointer. That's it. That's all you're going to get. That's a scalp. Then from the second one, you can sell and expect about 10 points. You got more than 10, average 15-point run. That's what you got. That is a good swing. But because you are in a trading range, chances are this right here is support anyway, right? All the way down. So what is this now? If this is a supply zone, what zone is this? This is a demand zone. So what do I need here? First buy 68, goes up, comes back down. Second buy 78. This is a swing, but you're buying into a trading range here. Tomorrow, this could keep going up. And then the next zone we're going to be testing for bears is going to be right around here with the early on possibly there. We already tested that, so we're going to get above this. Tomorrow we're probably going to test here and see if we can get a nice swing from there. We'll see. But anyway, so trading range day, it turned into a trading range day. But I think the signs were there already with this. And the tight bull channel, it's probably a bear flag. It probably is going to go sideways and reverse back down. So that means it's going to go into a trading range and form a bigger trading range. So all in all, bears and the bulls made enough points selling the pivotal turns. And I think it was a great day. I did pretty good. So hopefully you guys didn't lose much. It was confusing to many, especially at the open. But once you have the low 1, low 2 failure and a high 1, high 2, bulls are buying, that's it. The only time when you should be looking for reversals, okay, when you start to see always in short sets up, generally it's either with 3 bear bars or less, only 2 bear bars, but one of them has a gap body and the bulls are not able to close it. That right there was an attempt to close, but they failed and it started to swing back down. Anyway, so I already did the QA session. I'll see you guys tomorrow, everybody. Bye. And I think tomorrow it's Tim Stout in the morning and I come in the afternoon. So I'll see you guys in the afternoon at Brooks Price Action Trader. Bye.